the worst Canadian bank is to be revealed in this video. It's the bank that is the most over leveraged. We're also going to compare it to a US bank during the global financial crisis and draw some comparisons there. So you can see the insane amount of risk in the financial system, which the financial media just is not acknowledging. And neither is anybody, to be honest. Neither is the OSFI, the regulator, neither is the Bank of Canada or the government, exactly like the government was and the regulators were before 2008. The worst bank is the Bank of Nova Scotia. It has the highest debt to equity ratio of all the Canadian banks. But I want to first start off with saying that the Canadian banks, they all have a really high debt to equity ratio. It's basically the debt versus the amount of equity they have. And if that number is really high, if it's above 2, then it's in an area of risk. It's not a good sign at all, especially for a financial institution as well. It's a sign that they're over leveraged. And I've also been looking at the amount of cash that they have, different metrics like their liabilities and their assets, cash and cash equivalents, how much debt they're carrying, and all different kinds of things. And the Bank of Nova Scotia has an insane amount of loans, something like $500 billion in loans, and not much cash on hand to deal with that. So if you take a look at it, you can see how it's at all-time high, and you've had these previous spikes before in the debt to equity ratio, which haven't really held, so we can kind of call them nothing. Whereas this has held up high since pretty much 2019. And it's interesting that because the yield curve inverted in 2019, and you can kind of actually see some comparisons between this and the yield curve. So it is really interesting. Now, what I want to draw your attention to is Citi Group, because I've got up Citi Group's debt to equity ratio here. So you can see basically what happened in 2008. So you can see that this debt to equity ratio cranked up all the way to 5. Having said that, other banks, they were at 3, 3.8, 4. So this is the highest one, the worst one that I could find at the time. And this is during the peak before the financial crisis. So these aren't good records to set. You can clearly see how that has peaked, and now it's around 1.5. It's below that 2, which I said is the area after you get above 2, you're getting into risky territory when it comes to debt to equity ratios. And it's really interesting because if you fly back time here, you can see how during the late 80s and during that banking crisis, it was coming down during the 90s afterwards from another high in the debt to equity ratio. And when you look at the yield curve in Canada, it's telling us that the recession/depression that we have could be as worse as the one in the late 80s, which I know is just mind-boggling to even comprehend with the debt levels that we have today. It would be a depression, not a recession like was had back then. So that's really, really interesting. And then if we shoot over to Wells Fargo here, and I show you this kind of more accurately shows you can see here we're at an insanely high debt to equity ratio, which shot back down during that late 80s. Unfortunately, this is maxed out. It doesn't go any further back than this. We don't have any more data, but you can see how that number was coming down. So having a high watermark here is not good. And at Wells Fargo, it peaked out in September 08, literally when the crisis happened, at 4.1. So it's really, really not a good thing that this thing is so high at the Bank of Nova Scotia. Again, it's at 4.2. It's above where the Wells Fargo debt to equity ratio peaked during Q3, Q4 of 2008, during basically the height of the financial crisis. Even though the recession that followed, even though they said it lasted a year or two, the reality is in places like the UK and the US, it lasted well into 2012, 2013. So you're talking 4-5 year long recession. And really for some people, it lasted so long because inflation stayed high, their wage growth remained low, and in real terms they were losing money, and that's been the case for so long. I think the same thing is true in Canada because these CPI numbers are so manipulated and massaged. And then if you look where we are with loans to the private sector, you can see, and I used this number in a recent video as well, you can see it's right now above $500 billion. It's just shooting ever higher. So we have as much leverage as we've ever had in the system in Canada. And I don't know if I can max. Yes, I can. So if you max this out, you can see how during the late 80s, that was below 0.2 of a trillion. So it's kind of insane how we've gone from 200 billion in the late 80s to 600 billion. I mean, it's absolutely insane. It's unbelievable. So this is household debt to disposable income, also at all-time high. When you looked at household debt to GDP, it shows an actual peak, and if you look and compare to the US peak as well, you can see that it peaked during 2007. So this could be used as a forward indicator to show that it's not a good situation that we're in right now. So all these things that are coming to head are not really good at all. And one last thing that I want to show you, gross loans, here you go, 558 billion. This is what I want to show you. So this chart just kind of demonstrates how insane the amount of loans, over $500 billion in loans on their balance sheet. Like it's a huge amount. And if you go to their financials as well, and you look at their cash, so if we go to their balance sheet and we look at their cash, it's hilarious. I just can't believe it. You know, they have 8.13 billion. They've got cash equivalents of 48.42 billion. But the reality is that is just a drop in the pond, drop in the ocean, should I say, not a drop in the pond, compared to the amount of loans that they have outstanding. It's just absolutely insane. You also have to remember the Bank of Nova Scotia is one of two banks, with the Bank of Montreal that have been operating in China. And there have also been many other banks like Barclays, Citi Group that are also operating in China. That is not so good because those banks, the real estate crisis in China that's happening, it could be catastrophic for those banks because they are going to be the last ones to get paid. The Chinese do not care about these foreign banks in their country. I can assure you they will be the last ones to get paid. And the Bank of Nova Scotia, it's not just operating in China, it's operating in various parts of the developing world, I guess you could say as well. So how much risk is there? Probably a ton. In my opinion, the Bank of Nova Scotia is the bank that looks the most risky. However, that's not me saying pull all your money out, do a bank run on the Bank of Nova Scotia or anything like that. If your deposits are backed by CDIC, which is basically the deposit insurance program, you don't really have anything to worry about, in my opinion. And that is because that is backed up by the money printing machine of the federal government. So you have to remember that. So anyway, thank you so much for watching. If you enjoyed this video, you might like that video there. You might also like that video there. If you haven't done so, please sign up to my free email list, and I will see you guys on the next one. Take care of yourselves.